Hello, I'm Ataman Özyıldırım, Director for Business Cycles and Growth Research at the Conference Board, and this is your Economics Watch brief for emerging markets for the month of January. The outlook for emerging market economies in 2018 remains strong. The leading indicators improved in November in China, India, and Brazil. Even though industrial production growth moderated in China and India, and even contracted in Mexico through October 2017, growth of exports remained high in all three economies as well as in Brazil. Manufacturing in emerging economies is poised for an upside in 2018. Purchasing managers' indexes are in expansionary territory for most emerging markets. These trends in production, exports, and manufacturing point to stronger business conditions and market expectations for this year. This is also supported by the Conference Board's latest CEO survey. CEOs expressed improving expectations on short-term prospects in both emerging and mature markets. Yet several challenges remain ahead. For instance, the recent corporate tax cuts in the US may add pressure on emerging markets to adjust their tax policies in order to remain competitive. The US corporate tax rate will now fall below those in China, India, Brazil, and Mexico. This will reduce the cost of repatriating profits of US firms' foreign subsidiaries. The capital outflows from emerging markets are likely to grow, though the magnitude will depend upon the intensity of capital controls and the type of assets companies are invested in. The impact of the US tax cut will of course depend on each country's openness to trade, reliance on foreign investment, and exchange rate volatility. More specifically, the election cycles in Brazil and Mexico pose additional challenge to their economic outlooks and bring potential volatility. Brazil has made progress on the reform front lately and will continue its ongoing recovery from the recent recession. Yet, in both Brazil and Mexico, policymakers may divert attention to stressing short-term gains in their election campaigns. This can escalate uncertainty and thus delay investment decisions. The election of pro-reform candidates would support business confidence and help increase private investment. I'm Ataman Özyıldırım, and this was your Economics Watch brief for emerging markets.